chart patterns are really popular in trading, and it is also one of my favorite ways of trading the financial market, and one of my favorite chart patterns are double tops, double bottoms, head and shoulder pattern. But I also love to trade the other patterns like ascending triangles, descending triangles, symmetrical triangle patterns. So in this video, I'm going to teach you how to trade the triangle pattern with the exact rules, with the exact stops and targets, and everything you need to know in order to trade these pattern in the most efficient way. So, like I always say, if you want to become a professional, a profitable trader, you need to follow these 4 factors. Number 1, observations. The first thing we need to look in the financial market is to observe the market. We need to look for the possible trading setups. Once we see that, then the next thing we need to look at conditions. So once you observe the market, you see the possible condition after your trading setup. Once you have your conditions there, then the next thing we need to see is our entries. And after that, what do we have? Of course, it's our targets. Once we observe the market, we look for the condition. Once we look for the condition, everything is going with our analysis. We set up our entry. When we take our entry, it is really important to set your stop loss and your take profit. Once you have everything in place, then that is how you can have the edge over the market, and that is how you can make money in the financial market. So with that being said, let me give you the full rules how to identify a valid patterns, starting with this descending triangle bullish. Now let me walk through the first factor, which is observation. So at this point, you observe the market and you look for a possible pattern. So what do you see right here? You see the price is pushing up, and here you see a possible formation of descending triangle. So here we can see a possible trading setup. So in order to identify a valid descending triangle pattern, or you need to see that the price is making lower highs at least 2 times, if 3 it's better. So we have 1, 2 and 3 touches right here, and price must make lower highs in this pattern. Now the lower level of this pattern, which is a resistance, a horizontal line, is right here, and exactly the same. We need to see at least 2 touches, and if 3 it's better. So we have a completion of this triangle pattern. So this pattern can be traded in bullish and bearish both ways, but in this condition we are trading a bullish trade. Now how do we know that? First, we observe the market. We have a possible formation of this triangle pattern. Now the next thing, the conditions. The way we look for the conditions are price must be trading above 50 EMA. This must be your set in stone rule. So this red line is my 50 EMA, and we must see the price is above 50 EMA, and then we have this consolidation within this pattern, and that consolidation must happen above 50 EMA. Let's say we have a price that has closed below 50 EMA. In that case, it will be an invalid pattern. So now we have the conditions that the price is above 50 EMA. We are good to take our long trade, and we need to set up our entries. Now the way we trade the pattern, I'm sure you guys know how to trade the patterns after the breakout. Yes, the breakout candle is our entry candle, but this is the main rule. We need to understand that it must be above 50 EMA. Only then we are taking our bullish trade. So everything is going with our analysis. We observe the market, we have the possible pattern, we have a condition that price is trading above 50 EMA. We are now ready to take our entry, and our entry candle is at the breakout of this pattern. Once we have a breakout of this pattern, we have a confirmation that the price is likely to continue in the trend after this decision area. Price wants to push up and keep on pushing up in a trend. So once we have that entry condition, then we will set our targets. So let's see how it works. Let's play the market. Right here, what do we have? We have a candle that has closed above this triangle pattern, this descending triangle pattern, and this is our entry candle. Now one more rule I want to give you. The entry candle, if the entry candle is a big candle, a big green candle that close above this pattern, that is an extra confluence. It doesn't has to be an engulfing candle if you are confused with that. What I mean is, let's say you have a red candle here and then you have a very small green candle that close above this trend line. That is also fine, but if you have a big candle like this that closed above, the single candle closed above this trend line, then we have a very good chance that the price wants to push up in a momentum. Again, I don't want to confuse you. Let's say we do not have this green candle right here and we have few more candles, and then we have a small green candle that close above this zone. That is also fine, but if we have a candle like this, that is a very good signal that price wants to push up in a trend. Now, as we got our entry candle, we set up our stops and target, which is our 4 factor right here at the close of this candle. We set our position tool. At this point, the way you set up your stops and target, I normally go 1.2 to 1 or 1.3 to 1 risk to reward ratio. I keep my stop loss in 2 ways. The first way is I keep a stop loss below the wick of the entry candle and then go 1.2 to 1 risk to reward ratio, something like this, or 1.3 to 1 like this. So let's do 1.2 to 1 risk to reward ratio right here. So this is the first way of entering this type of trade. Now once you have that, the second way of entering the trade is you can keep your stop loss below this resistance line, something like this, and then go 1.2 to 1 risk to reward ratio, which is something like this. So both ways are fine, but if you want to enter in a less aggressive way, then that would be much better to set your stops and target like this and go 1.2 to 1 like this. So here we got, and let's see how it plays. You have this pattern ready. We are above 50 EMA. All the rules are met, and let's see how it works. Price push up was a bit of a pain, but eventually it hit our take profit. So this was one of the descending triangle bullish trade. And let me show you one more pattern, which is symmetrical triangles. Now this pattern can be bullish or bearish, both, and if you are taking a bearish trade, it happens in a downtrend. Price is now pushing down and then it forms this pattern. Now if you want to take a bullish trade, it will happen in an uptrend and the pattern will form something like this. Now in this case, if you remember the rule, we observe the market. Yes, we have an observation. We can see a possible pattern. We have 1 and 2 touches within this pattern, like I said, and then we have a higher lows, 1, 2, 3 touches. Here all the conditions are met right here, and in this type of pattern, the price make lower highs, something like this, and the bottom line here, the price must make the higher lows. So this is how this pattern form. And another rule, price must be trading below 50 EMA. It is a very important rule if you are taking a bearish trade. Now price is below 50 EMA. We have all the rules are met. In that case, what do? We take our entry with an entry candle once we have that. Now if you remember, I said if we have a candle, let's say we have a red candle that is broken and close below this trend line, a very small candle, that is also fine, but that will decrease your accuracy. But let's say we have a next candle that is a big red candle that closed below this trend line, and that is just a single red momentum candle. In that case, it will increase our accuracy. So let me show you what I mean by that. Awesome. So what do you see? A breakout. We have a breakout out of this symmetrical triangle. In that case, we have our entry candle right here. Factor number 3 has been met. Now what do? The factor number 4, set your stops and targets, which is really important. Now similar like descending triangle, the way we set stops and target, we place the short position at the close of this candle, and let's place the stop loss above this trend line, and let's go 1.2 to 1 risk to reward ratio, something like this. Now we have everything ready. We are ready to take our trades. All the rules are met. At this point we are good to go short. And let's see, price is now pushing up and down, bit of a pain right here. Eventually it hit our target. Now let me give you a reality check. You will see this pattern a lot in a market, but not every trade will be a winning trade. I know I've shown you a 2 winning trade, but in reality we need to backtest first and pick up the best performing pair. Only then you can able to figure out you can trade this pattern. Then you will have a confidence that even if you have few losing trades in a row, you know that that pair has performed well in your testing, and there is a chance that you will have more winning trades. So that is what I want to show you. If all your rules are met and then you take your trade, we don't need to guess in the market if you trade with exact rules. Once you have that, then trust me guys, the chances of becoming profitable trader, it will increase dramatically. I hope you get a value out of this lesson, and I hope you enjoyed this video. If yes, don't forget to hit a like button for me. It helps me in the YouTube algorithm. And make sure before you trade it, backtest, gain your confidence, and then trade in a live market. Hope you trade green the rest of the week. See you guys in the next video. Till then, take care.